Good evening, everyone. All right, it's time to begin. We're 5 minutes past the hour. Um, Anyone else who's not here will either catch the replay or join in with us as we go along. Okay, so this evening's class is all about how to set your stops and your profit targets using the Elliott wave theory. Okay, now we're just going to jump straight into it, straight into our charts. So if you'd like me to look at a specific chart, just drop the charts that you'd like me to look at in the chat box, and I'll be more than happy to start using those charts. Okay, so suggest some charts and we'll work with those. I'll give you guys a few seconds. All right, I see the first one that was submitted was Euro JPY. Okay, so let's start with Euro JPY. There we go. Great. So we have the Euro, dollar, Japanese yen. So if we look at this, we need to also understand how we look at our charts in terms of the time frames that we want to look at them on. This one doesn't look too bad on the 15-minute time frame. Make it a little bigger for you guys. Let's take that off. Okay. Generally, I like looking at my charts on the 1 hour time frame. Okay, but based on the instrument, you may need to go to a lower time frame or to a higher time frame so that we can get this nice, clean type price action. Okay, when you go to the lower time frames, let's say 15 minutes, it kind of makes it, it stretches it out a little bit more. Doesn't necessarily give you that clean type of price action that you'd like to see. So I like to use it on the 1 hour time frame, and it helps to reduce some of the noise when you're in the market as well. Okay, so let's look at this. All right, let's look at this wave. This is the current wave that we have to the upside. All right, so if I'm looking to get into this move to the upside, if we look at this, just bringing in a label. Let's bring on an Elliott wave, 5 wave move, because this one looks like 5 waves. We have, this looks like one, right? So if we look at these waves, this looks like one, this is two, this is three, this is four, this is five. You can see this clearly. This is 5 waves to the upside. And we all know that after 5 waves, we have ABC. Okay, so we have a correction, and then we have another 5 waves up. Okay, so that's what we're going to be looking for on euro dollar Japanese yen. How do we trade this? Okay, now a lot of us may not understand when a wave is about to start or when a wave is complete. Now, for example, let's just take this wave count off. So let's say we understood that this wave completed in this area, right? And we're looking to go to the buy side. What you can look for is to allow the price to move and give you an impulse, and then allow the price to go into correction, right? So you allow the price to give you your first wave, and then you allow the price to give you a correction. When the price gives you a correction, what you'll be looking for is the completion of the correction. Now, some corrective formations could become complex. They could become expanded, okay? So a little trick that I like to use, and well, it's very common, is that we like to trend the corrections. We like to draw trend lines over the corrections. Now, if we understand the different types of corrective formations that exist, we would be able to better identify them and better understand if these corrections are done. Now, typically, when we're trading the Elliott wave theory, we try to stay out of the corrections. We don't really want to trade inside of the corrections because the price becomes very choppy and you could find yourself getting stopped out a lot. Okay? So here's what we'd want to do. You allow wave one to happen, and then you allow the correction to happen. Okay? Now, when the correction happens, what you're going to do is try to identify what's happening here. So this correction went flat. Okay? So this correction went flat. And if you are a trader who can identify your corrective wave count, this one is a little bit more complex. I would look at this one as okay, let's say here WXY, and this is XZ. So this is more likely a complex corrective formation, WXYXZ formation. So this would be labeled like this. This is the first wave here. From here, W, X, Y. This is 1, 2, 3, right? So this is X, and this is 1, 2, 3. This is Z. Okay, so you have a complex correction here. Now, a lot of us are going to be looking at the completion of WXY and trying to go long at that point. Okay, so if you were looking to go long on the completion of WXY and you entered here at the end of the WXY correction, you would have to place your stop behind wave one. So your stop would have to go all the way down here. Okay, so that is where you'd have to place your stop, protect your stop behind the impulse of wave one. Okay, so you protect your positions by placing your stops behind the impulse. Okay, so if you enter here and the price goes up, as you can see in this case, it did not go in your favor all the way. It went up, bounced, came back to the downside. In some cases, it may even come below this entry, below the low, and then go back to the upside. In other cases, it may continue moving up because we have WXY and the price continues moving up. So whenever you find yourself in a complex corrective formation like this, it is good to not panic, okay? Make sure that you set your stop at a position where you are risking maybe 1 to 3% of your account on every trade. This way, in the event that the price continues down, retest the low, and you get stopped out, it does not damage your account. Okay, so you're just going to make a small loss, and that's going to be maybe 1 to 3% of your account. And in a case like that, what you would see is this type of price action. Price goes up, it makes this correction starts to extend, and it comes down back to this area, and then it goes back up like this. Right? Sometimes it may even surpass and then come right back to the downside like that. Okay, so we got to understand that if we get stopped out on the wave that we're expecting to go up because price extends back to the low, it simply means that the market's not looking to, reverse to the upside. It is looking to make a corrective formation for more downside. All right. So we need to set our stops in areas where if the stop gets hit, it tells us that the market's not going in the direction that we're looking, or it's not going in the direction that we expect. Okay, let's take this off. So if I entered here, my stop goes here. Let's put this in red. 1 second. Good. Wonderful. So this is where my stop would be placed. And once I catch this breakout to the upside, once I close above the highs, I'm going to take my stop from here and I'll bring it up here, protect it behind the correction. okay? Because I'm not expecting price to come back below this corrective formation. I'm expecting this wave to complete itself first, because we need to count our waves as 1, 2, 3. And when I say 1, 2, 3, I mean we can say this is 1, this is 2, this is 3, like that. Okay? So if we count them as 1, 2, 3, and we use measured moves help us, and I did the class on measured moves with you guys. That helps us to identify where we can have a potential wave completing. And in a lot of cases, if it completes at a measured move, it means that you're potentially getting a 3-wave corrective formation. Okay? And it is always good to trade wave by wave. You don't really want to hold on to a trade for a very long period of time, unless maybe you're a swing trader or investor and you're looking to, you know, take on the wild swings up and down in the market. One of the best ways to trade is to trade the price wave by wave. Okay? And to do that, it is good to understand where a wave could end. So we're potentially in maybe a wave 4 and looking to go into a wave 5. Okay, so that is potentially what we're looking at. As you can see, the price is going sort of flat. It is building some sort of corrective formation. So most likely we'll be going up again. Okay, and one of the things that we can do to identify what type of corrective formation this is, we can just use a trend line. Okay, so you can use a trend line like this. Right, so this is potentially what we're getting. This is, let's see here, we have impulse down. We have, let's see, 1. Okay, so this looks like 1, 2, 3 here. So the correction most likely maybe ended in this area, and we're getting this wave moving to the upside now. As you can see, we do already have a breakout of this channel to the downside. Okay, this type of flag type formation. So we already have a breakout. Once price closes outside here, it would add some confirmation that price is potentially looking to continue to the upside to complete our wave 5. Okay. So let's take these off. Good. So once we get the breakout here, we move our stop from the bottom, we bring it up to this level. Price continues moving up. In order for us to set our profit target, what we would do, now I'm using these lines to measure from TradingView, but right now I notice that TradingView has a little problem where the lines change. Right, so it's not changing right now, but it's okay. All right, so it's okay right now. It looks okay right now. Okay, so this would be my first profit target right here. I use market geometry. I measure my first wave, and I use it as my projection for my first profit target, right? So once the price gets to this level, I am out of my trade, okay? And I'll wait for the correction to give me some sort of confirmation that the price is going to continue to the upside for one more wave, okay? And the next wave, I will still use the projection of wave 1 to project wave 5. So I will expect wave 5 to potentially end at this same measurement. Okay. Now, in a lot of cases, we can have wave 5 be a truncated wave, as I told you guys before, or wave 5 can be some sort of diagonal formation. So you need to look out for those types of formations as well, because wave 5 does not have to be the exact length of wave 1. And if wave 3 is not an extended wave, then that means that there is a great possibility that wave 5 could become an extended wave. Okay, so we need to keep these rules and guidelines in mind whenever we trade wave fives and whenever we trade wave threes of corrective formations. Okay, so looking to enter at this point, my entry would be right here. This area would be my area of entry, especially if I saw this nice green candle. Now, for those of you who understand sniper entries, which is another class that I taught earlier on, you would want to look at the best times to get into the market. So you want to look at this European session open, which would make for a very good opportunity to get into the market. So you're looking at the 2 a.m. candle to 3 a.m. You're looking at the 3 a.m. to 4 a.m. candle. You're looking at those as potential entry points. And you're also looking at the 5 to 6 a.m., 6 to 7 a.m. candle as well, for those making good entry points or exit points as well. It all depends on if you got the impulse earlier on in the session. So all you want is the impulse of the day, because the correction in most cases is no good. So you're just looking for the impulse of the day, which is the big move that happens for the day. Once you catch that, you're out of the market. There is no reason to stay in the market, okay? Because all that's going to happen is that you're going to go into correction. The correction could become deep. It could end up going against you, and you give back almost all of the profit that you made that day, okay? So this is the next move that I would be looking for. If this correction is done here, and indeed we are getting this breakout to the upside, this is the move that I'm looking for. I'm expecting price to get up to this level. Once I enter on the close of this green bar here, my stop would go exactly below. Okay, so my stop would go exactly below here. If I'd like to protect this trade even more, my stop could come below this corrective formation. Why? Because wave 4 should not cross into the price area of wave 1. So I can protect my trade that I'm taking off the corrective formation of wave 4 to catch the wave 5. I could protect that trade by placing my stop behind my wave 2, okay, which is this corrective formation. I can put my stop just behind here. But once I get the breakout, what I'd like to do is move my stop from here and bring my stop here. That would reduce the risk on my trade substantially, okay? And allow me to hold this trade until I get to my profit target. Once I get to my profit target, I'm going to exit the trade and wait for my ABC correction, okay? Once I get my ABC correction, then I'm looking for another entry to go long again, because I'll be expecting the impulsive cycle to continue. All right. Any questions so far? Anything you guys are not too clear on? Just drop your questions in the chat box if you have any. I'll be more than happy to go through your questions with you. How many of you guys are familiar with the Elliott wave theory? And I see Lawanda. Lawanda, you're the one who asked for Euro Japanese yen. Is this a pair that you're trading right now? Okay, let me see here. Lawanda says yes, and it's not in my favor. When you say it's not in your favor, what do you mean? Do you mean that it's you're selling and the price is going up? Oh, okay. So Lawanda is selling and the price is going up. So Lawanda, you understand that Okay, tell me, why are you selling? What's your reason for selling? Tell me where you sold. Let's get into this. Tell me where you sold and give me your reason for selling. Let's give Lawanda a chance to submit her comment. Let's try to get into this with Lawanda. Let's try to understand what's going on, why Lawanda sold, and what she's looking at in the market. Okay, so Lawanda says, I was looking at the day chart and the Elliot Wave Pro. Elliot Wave Pro and the white. Oh, okay. So that is an indicator, right? So you saw a white dot to sell. At what price and what time? What price and what time did you get this signal? So let's try to understand where Lawanda got the signal at, in terms of what price and in terms of what time. And we'll see what was going on at that time. Okay, so Lawanda says, give her a second. So let's give her a second, let her get that information, provide it to us, and we will try to analyze it. Let's give Lawanda a second. Okay, so in the meantime, let me see here. We have Sandraka says entry candle hours 3 to 4, 5 to 6, 6 to 7. Are you in Eastern Standard Time, Sandraka? If you're in Eastern Standard Time, you're looking at 2 a.m. to 3 a.m. So that candle from 2 a.m. to 3 a.m., you're looking at that candle. And then you're looking at the candle from 3 a.m. to 4 a.m. Okay? So that's 2 candles. We're looking at that as the European session open. Then we're looking at break time, lunchtime on the European session, which is 5 to 6 a.m. Eastern Standard, 6 to 7 a.m. Eastern Standard. Okay? You're looking at that time for entries or exits. And the next time that you're looking at 8 to 9 a.m. and 9 to 10 a.m. That is the US session open. And the exit times that you're looking at for your day, unless you have high impact news events coming out in the latter part of the session and you decide that you want to stay in, you're looking at 12 p.m. as your exit time. That's when you want to be out of the market generally. So if you're not getting out of the market at that time, then you're going to be looking at maybe exiting at about 4 o'clock. And one thing a lot of you guys may not understand, most times the big moves happen in the European session, in most cases. In some cases, we do get some big moves in the US session, and that's generally because of high impact news events. Okay, so most of the meat of the market happens in the European session, especially if you're looking at a peer that is from the European and US session. Oh, okay. So Sandrika says Mountain Standard. Okay, so that time that you provided, I guess. Um, okay, this is Sandrika. I guess that time is based on your time zone. I'm not sure what your time zone is. So I'm assuming that's based on your time zone. So maybe it's the same thing. Okay. All right, let's see. let's see. Okay, Lawanda said, I went in at 133.352 on the 17th. So let's see here. 17th, 133, 352. So somewhere around here. And let's draw a little line. 17. Doesn't look like the 17th. It for that price, it can't be the 17th. So it had to be maybe the 16th, right? Am I making sense? Oh, okay. Let's see here. Ah, okay, okay. I see what's going on here. So I think Lawanda entered somewhere around here because of the price that she gave me. I think it was maybe the 16th. So I think she entered maybe somewhere around this level, right? Somewhere right inside this area here. And this is where she went short. Okay. So if she went short here, this was not necessarily a bad entry to go short. Let's try to compress this a bit. Let's see if we have reason to back up going short in that area. Let's see. So if I look at this, let's draw in some waves. I'll use WXY. So if I look at this, I'll say this is W, this is X, this is Y. Okay. Then we have three waves down. One, two, three. Another WXY if I'd like to label it like that, or ABC if I'd like to label it like that. Okay. And then I got this wave pushing back to the upside. Okay. This one is a flat. You can see this clearly that it's a 1, 2, 3 up, 1, 2, 3 down, and this is 5 up. So that's a flat. Okay. So this is three waves. I'll change the color on that. And then this is a flat. Okay. And I'll change the color on that too. Okay. Put this one in red. Wonderful. So if Laquanda chose to enter short at around this level, this is not a bad entry. Okay. So this is not necessarily a bad entry. This type of formation here is a little bit on the complex side. So this would have been a better entry down here to go short, safer entry. So either way, this is where she entered, going short. So all of this profit was given back. And why was she not able to take profit here? Let's see if we can figure that out. Okay, so let's see. Why was she not able to take profit here? We have, let me just take these drawings off. Just trying to figure out why she was not able to take profit in that area. Okay, I'm trying to understand the entire wave structure. Okay, so this wave structure has always been very complex. So let's see. So this one looks like 1, 2, 3, potentially. This is a flat pattern formation. Okay, so this one looks very complex. So this could be 1, 2, and 3 to the upside like that. So this is our three-wave move up. And this wave looks like the wave that we should be looking for over here. Okay, so this wave looks like the wave we should be looking for, I believe. Okay, yeah, this looks like it. Potentially, that's the wave that we should be looking for. And we need to understand that in a lot of cases, what can happen is that in wave three, we don't always get a measured move. So sometimes wave three could be short because remember, wave three could be a truncated wave. Remember, based on the pattern formation that we're looking at, and in this case, it looks more like a flat pattern formation, but this flat is going more, let me see here. It's more like a running flat type situation. Something kind of like this is what we're getting. This is, sometimes we look at this and we say um, this is a rising flag formation. This is where the flag is heading to the upside. So this is the type of formation that we're getting, and this is actually building a running flat, right, to the upside. Very complex. I'll give this pattern formation that it's very complex. It's not an easy pattern to identify. Okay, so this one is moving to the upside. We will still expect price to continue moving up, and what we'll expect from price is this move. We'll expect this move. Okay, so we'll expect that move to the upside. Now, Laquanda, you were not able to catch the opportunity to get out of the trade simply because you did not realize the type of pattern formation that you were in. And if you use market geometry, it gives you a very good idea of what area to get out of the trade at. Okay, so in some cases, it's going to be a short wave. And what you can do as well to help you is you count, this is one down, this is 1, 2, 3. So that is a complete correction. And then you got your wave 3, right? So in this case, you're expecting a long wave. So you could have thought to yourself that this was going to come down 1, 2, 3, 4, 5, and then you're out. But you have to remember that in some cases, the waves come in 3 or they come in 5. So where wave 3 could be a 5-wave move, it could also be a 3-wave move. It could be an ABC formation, like in this case, you have a short wave, then a long wave. And when I say a short wave, I mean this is a short wave, and this one is a long wave. So this is more of an ABC formation, okay? This is not an AB equals CD formation where wave A and B, A to B is the same length as C to D, okay? So keep that in mind, and in some cases, you're going to have to exit your trade. Now, another thing that you need to be able to identify, let me just put this back on the 1-hour time frame. Another thing that you need to be able to identify is this. You see this type of price action that is coming down here? This type of price action is basically telling us that the market is slowing down. And in a lot of cases, we could look at this and identify and say that this is potentially a diagonal formation, okay? And if this is a diagonal formation, to the downside, this is telling us that potentially the wave down is coming to an end, and we'll expect price to start pushing in the opposite direction. So you wouldn't want this wave to go against you, okay? Or even if it's going to go into correction, or if it's going to make a full out reversal, you wouldn't want it to go against you. You'd want to get out before it goes into correction or into reversal, okay? So you need to be able to look out for these ending formations so that you can take profit. Okay? Take your profit whenever you find yourself in a situation where you have an ending formation. Also, if you're day trading this instead of swing trading this, you won't necessarily be holding on to the trade for the entire wave, all depending on how big the wave is going to be. Okay? You're going to trade the impulse today, and then you're going to allow the correction to happen. Most times the correction will happen overnight, and then you're going to come in and look to trade the next impulse the following day. Okay? All right, so let's see here. Let's go back a bit. Let's see here. Lawanda said, I got out with profit at 132.515. Sorry, 151. So Kwanda was able to get out around somewhere around this area here. Okay, so that was a good exit, not too bad, but it looks like you were exiting this trade at about 6, around 5, 6 o'clock, around that time. But was that the ideal time to exit? Let's see here. According to sniper entries, this is the 5 to 6 a.m. candle. So around this time, it would have been ideal to exit this 5 to 6 a.m. candle. Yeah, this would have made a nice exit. Now, for those of you who would understand exactly how to trade sniper entries, then you'd be deciding whether you're going to be looking to get in again or if you're going to stay out. Okay, so this was not a bad exit. If you were able to catch this impulse, this was not a bad exit. Okay. Let's see here. Just going through the chat box. Okay, I see Bella says, how do we recognize that is a ending formation? All right, so you need to know your pattern construction. So you need to know what a diagonal formation is. You need to understand that you can have a diagonal in a wave 5. And when you find a diagonal in a wave 5, it means that it's an ending formation. Okay, so that will end the move to the downside and either put you into a correction or you can go into a full out reversal back to the upside. Okay, it all depends on the higher degree pattern formations that you're in. All right, so ending formations, you look at diagonals in wave 5. Those are generally going to be ending formations. And when I say ending formation, it's only ending the current impulse. Okay, so it's ending the current impulse, and you're either going to be going into correction or your next impulse, which is part of a bigger correction. Okay, is that clear, Bella? I see Lawanda says, thank you. You're most welcome, Lawanda. Okay, let's go back a little bit. Let's go back. I think I saw some more comments. Okay, I see Sandrika says, studying the Elliot wave theory. Wonderful. I see Kevin says, somewhat familiar with it. Okay, wonderful. All right. Okay, so someone else wanted me to take a look at XAU. Okay, let's take a look at gold. And before I even do that, don't forget that we're getting this right now, right? So getting a breakout. So this is what we're looking at. Just take this off. Don't forget we're looking at this wave to the upside. Don't forget that it's a wave 5. It could become complex and it could also become a short wave. So keep an eye on that. All right, so let's look for XAU. Let's see. Here's gold. All right. Okay, so we're on gold right now. And we all know that we had this nice strong move down on gold. We had this nice strong move down on gold. Gold is coming down. And some of us are looking to either go short right now, and some of us are looking to go long. Okay, let me see if I can just remove some of this. So this was me. I think I can't remember when I did this forecast. Okay, so this was me looking at this as a potential 1, 2, 3 to the upside, or 1, 2, this is wave 3, and then we get a wave 4 correction, and then we get wave 5 back to the upside, right? So if this is a wave 4, right? That means, let's use a horizontal line, that price should not violate this level, okay? So this price should not violate that level. It should find a way back to the upside if this is going to be a bigger wave 4, right? Now, if this ended one, okay, this is 1, 2, 3, 4, 5. This is wave 5 ended here, right? That means this is a correction that's coming to the downside. Now you can see that this is very choppy, very, very choppy. So it is some sort of corrective formation that is heading to the downside, right? So we simply just have to try to understand when this correction is going to end. So if this is going to be 1, this is, let's see here, this is potentially 2, this is 3, this is potentially 4 here. We got 1, 2, 3, 4, 5. So this is 5 waves down, okay? Now it's coming down corrective impulsive. So we get 1, 2, 3, this is 4, this is potentially 5. 1, 2, 3, 4, 5, right? So we have 5 waves down and it's corrective impulsive, right? So let's change the color on this. So with us getting 5 waves down, we're either going to expect this to be a correction, or this is going to be where price makes a reversal back to the upside. Because why do I say make a reversal back to the upside? We have this wave 1 territory. So if this is going to be 1, 2, 3, this is 4, and then we get 5, this price should not pass this red line. This red line marks the end of wave 1. Wave 4 should not cross into the price area of wave 1. Okay, so if this price gets down here, it means that this is not a 5-wave move up. This is actually going to be a 1, 2, 3 up, and then the price is coming down for the next impulse to the downside. Okay, so we got to be a little bit cautious with this one, but I'm looking at this one as bullish, right? Now I know that the price action is corrective, but then at the same time, the price is moving very, very corrective. Okay, whether we're getting impulses or just corrective formations, the price is very corrective at the moment. So it can go up correctively, especially since this is expected to be a wave 4. What you can normally find is that it just kind of ties itself into the wave 5 and just the impulse wave. They just kind of tie themselves together and extends back to the upside. So I'll expect that this would give me some sort of complex type formation and then just kind of work its way back to the upside slowly. Okay, so let's see, what can we potentially be getting here? All right, let me see if I can outline as many waves as possible. Okay, so this, I'm looking at this as one. We got 1, 2, 3, right? So this is a 3-wave move. And one of the things that you can do to kind of like confirm this is you can use market geometry, as I told you guys before, to measure the waves. And you can see this is an exact, practically an exact measurement. Okay, this is practically an exact measurement. So this is 1, 2, 3 to the upside. So if this is 1, 2, 3, then this wave down is what I'm expecting now. So I'll expect that wave to come like that, right? And right now it looks like we may potentially be getting that wave, and this is just part of that correction. And bear in mind that the price could change, the price action could change, but so far, this is what we're looking at. So this is 1, 2, 3 up. So this could be coming down now, where we get some sort of correction here, 1, 2, 3, and then we drop, completing this wave at this level. And if we complete that wave at this level, then we'll expect maybe this wave will come, okay? So this wave over here would be the next wave that would be expected to come at the end of this, come back here, back to the upside, and then we drop. If we do not drop and price extends and continues moving up, then it means that we could be going all the way back to the top or making a bigger flat flat pattern formation and continuing back to the downside. But I have a lot of doubt that that is the case. I believe that this, even if this is a corrective formation, I believe this is going to take us back to the upside. Okay, but we'll see. Once we violate this line here, it means that we're bearish. So at that point, my view will change. Okay, so for now, just follow the wave patterns. You don't want to be holding a trade too long. So these are levels that you're looking at. You're looking at these levels right here. So once the price hits this level, you want to be out. If it hits this level, you want to be out. Okay, so far, we practically have a complete wave to the downside on this one. So this one could continue coming down to this level. Once it comes to this level, you're looking to try to buy it back to the upside again. So with you being able to buy it back, you're going to hold it to complete the length of the wave. If it continues moving beyond the length of the wave, then it could be making some sort of um, complex corrective pattern back to the upside, or just creating an expanded flat pattern formation. Okay, when I say an expanded flat pattern formation, that's where we have this breaking the low. We did not break the high, so this is most likely going to be some sort of expanded flat if it comes back and breaks the high, because the low is already broken. Okay, so if it comes back, breaks the high, it's going to become an expanded flat formation. And it could still expand all the way back to the top, okay? Extending the 5-wave move, because if it's expected to extend to the upside, it will be extending up in most likely 3 waves or 5 waves. And if it's 5 waves, they could make 5 correction, make another 5 to be a wave 3, make another correction, then make another 5 to become wave 5. And that could take us all the way back to the top. Okay. All right. So for now, just look at it as short-term bearish, because this one could just complete this wave down, then complete the wave up, come down to this somewhere below here, and then continue back to the upside. Doesn't necessarily have to break into this price area. We are just going to watch that level in the event that it does break it. And if it breaks it, then we are bearish. Okay. All right. Did that answer your question, Mark? Did that give you some insight on gold? All right, Mark says, yep, thank you for that. You're most welcome, Mark. All right, let's see here. Okay, any other questions, guys? Anything else you're not too clear on? All right, Sandrika says, great lesson. All right, anyone else? Any questions? Anything you'd like to know? Feel free, ask. Just giving you guys some time to submit your comments. Bella says, awesome lesson. Thank you. You're most welcome, Bella. All right, so remember, guys, if you are looking to go long, especially let's say you want to maybe buy or sell inside of this corrective formation here. This is one of the most complex times to decide to buy or sell. Okay. If you're going to get engaged with a correction, it is better that you trade in the direction of the impulse. Okay. So you wait for the price to come to the top of the correction since the impulse is down, and then you look for sell entries. Okay. So I would be looking for a sell entry over here. Why? Because I'll expect this wave to come back here. So this would have been where I would be looking for a sell entry. So upon the completion of my measured move, I'd be looking for a reason to sell. And let's see, what time is this? This is 10 a.m. So this is the 10 a.m. candle. So generally, I wouldn't want to look to get into the market at 10 a.m. Because it's very close to 12 p.m. and around 12 p.m. the market generally slows down, dies off. Maybe there was some sort of news event coming out maybe around 10 or 11 or 1 or whatnot. And so we had this nice momentum move to the downside. Okay, so you want to make sure that you look for your entries at times that would give you enough time, meaning enough room to get from your entry to your profit target. Okay, you don't want to be entering too late into the day. If you're entering too late into the day, remember volatility starts to die off in a lot of cases around 12 o'clock. So you're giving yourself a disadvantage of getting to your profit target. Okay. So in this case, let's see, this is a correction. We have 10. I would not look to jump into this trade. If I did take it, it would be because my measured move was complete and I saw that I had this big red bar, which engulfed almost half of this big green candle. Okay, so that would give me some sort of conviction that maybe I can take this trade to the downside. Okay, but by 12 p.m., I want to be out of my trade. Okay, so I would not be able to hold on to this trade for very, very long. All right. Okay, guys, let's see. This would have been the sell, and we'd only take the sell because of the trend. Some of us like to go counter trend. And if you're going counter trend, you have to wait until the wave is complete. Okay, so if you're going to go counter trend, you have to wait until price gets to close to the measured move or makes the measured move. Okay, and if it makes the measured move, then you can start looking for your entry. Okay, once you find your entry, you're trading for the distance of the next wave, which is this one. You're looking for that distance to the upside. Once you make that distance, you're out of the trade. If the price goes up, you don't make the distance, then goes down, stops you out, you're out of the trade. Okay? It just simply means that that wave was truncated and the price is going in the opposite direction, potentially full out reversal. Okay? Any questions, guys? Anything? All right, I'm not seeing any questions coming in. All right, let's bring this class to an end. I think we've done an hour. Oh, I see Shar is asking me to repeat the last statement. Um, Mark says, that was great. You're welcome, Mark. Shar is asking about the counter trend trades. Okay, so I was saying that if you're looking to enter a counter trend position, which means the trend is down, you're getting the strong move down, we're in correction, which means that you're looking to buy. So if you're looking to buy, that is going counter trend, right? So this is the first time that price went against you. You're not looking to buy into this. Price comes down, breaks the low, you're looking to buy here, right? So you're looking to buy around this area to take price back to the upside, okay? And if you're looking to get that, all you're looking for is this wave, right? So from here, you're looking for that measurement. Okay, as you can see, price almost makes the exact measurement. It's just a little bit more by a few pips or so, right? So price makes that exact distance. So you exit your trade and you look for your next position. Your next position could be a trend, a trade in the direction of the trend, which is to sell. So around this area, that's where you're looking to take the next trade, which is a sell trade. Okay, and you're looking to take it in the direction of the trend. And as you can see, the price did go, your profit target would be here. Okay, so once you get to that area, you exit your trade, you're now looking to go in the opposite direction, which is another counter trend trade. I don't like taking these types of counter trend trades. I prefer to trade in the direction of the trend. All right. Okay, guys. Thank you so much. It's been a pleasure having you once again. I will see you guys on our next class. Do some examples on any class that we've done. Bring them to our class. We can discuss them together. I'll be more than happy to go through them with you. Once again, thank you guys. I'll see you next time. Have a wonderful evening. Bye-bye for now.